Warm welcome to everyone again for this information session. We had a previous session last month on the Migrant Financial Resilience, on which many of you have attended. But today's session is largely focused on the request for application that you probably have seen, which is on onboarding private sector partners for Migrant Financial Resilience linked innovations. Ali, if you may. So just to start, giving a brief about UNCDF and the financial resilience agenda of UNCDF. UNCDF is uniquely positioned within the UN system as an agency focused on the private sector with a mandate of with a capital mandate, and we sit within a crossroad of being a development agency and a development financial institution, where we help the private sector and the market-based players through technical assistance, through market research and other researches with a capital investment mandate, and of course with leveraging policy advocacy to ensure public-private interface. Next. Just to contextualize, UNCDF's practice areas are divided into local transformative finance, inclusive digital economies, and least developed countries investment platform. Many of you would know that UNCDF works on the 47 least developed countries, and in the context of migration and remittance, we also work with some non-LDC countries, which are even necessarily the host countries of the migrants. Inclusive digital economies focus on many thematic areas, and in terms of the focus segments, focus demographies within this program, migrants remain one of the key focus. And when we say migrants, it's the international migrants and migrants workers and their families that we cater to, with a specific focus on the women migrants and the women family members of the migrants, for whom financial services and other non-financial services which contribute to their financial resilience becomes important. In the migrant migration and remittance program, our focus remains on increasing access and usage of digital remittances and remittance-linked financial services to the migrant community, ultimately contributing to the financial resilience of the migrant. And the way it is defined is the ability of the migrant community to withstand shocks, financial from natural, man-made, and man-made disasters, including death, disability, and other form of events that may cause that contributes to their resilience overall. Ali? Our work primarily focused on these four work streams or thematic areas in the financial resilience through customer centricity, through data and research, technical assistance, and some financial instruments that necessarily de-risk the private sector and the market-based players. So in terms of we work with, and we intend to work with the policy and regulatory bodies to create level playing field in migrant financial resilience through regulations and policies that are necessarily necessitated for the migrant digital wages, insurance, and pensions for now. On empowered customers, we will work towards creating ensuring skill, voice, and choice of the migrants and the women, with men and women migrants and their family members, ensuring consumer protection principles and insurance and pension literacy and digital finance literacy with them. Leveraging on the open digital payment ecosystem, we look forward to work on leveraging the cross-border interoperability and shared market infrastructure work on the overall program and UNCDF work to ensure such services are delivered in a cross-border streamlined fashion. And on inclusive innovation, we look forward to supporting financial institutions remittance service providers and other financial institutions, digital financial service providers, working with a broad range of different kind of institutions, including microfinance institutions, insurers, insurance brokers, insurance distribution channels, pension fund managers, banks, remittance service providers, money transfer operators, MNOs, and others to create business models and products and services that provide financial resilience to the migrant community in an inclusive way. Next. The goal ultimately is to improve the financial resilience and economic inclusion of the migrant women and men and their families. And in doing so, in migrant financial resilience, we look forward to, when we looked at this sector, the next one, Alu, we realized that financial resilience is one of the key important areas for the migrant and the communities, largely because migrant remittance often work as a substitute for many risk mitigation products, insurance, pension, and other risk mitigation products for a lot of migrants. Remittances reduce the debt burden of the migrant families. So if something happens at the migrant end, so if there is a lack of financial products that cover such vulnerabilities, then the migrant families would basically go back to their previous level of inequality, poverty, and debt burden. And in absence of those products, the financial resilience can never be achieved. Especially looking at the female migrants who are often employed in informal sectors and often limited financial exposure for different reasons, especially in the lowest development countries, lower financial literacy. The access and usage of such financial services is extremely limited, and that needs to be, that remains a focus. And in the advent of the COVID-19 in the last couple of years, we have seen that the issue of migrant financial resilience has been heightened because many of the migrants were stranded in the host countries without proper access to social protection and social insurance kind of supports. And other insurance and pension supports. The migrants, about 4 million or 5 million of which has permanently returned because of COVID-19 related unemployment, have nothing to fall back on because they didn't have old age savings or pension kind of products. And the formal finance and financial inclusion was also limited in the migrant community, which kind of prompted UNCDF to look at this sector and bring migrant financial resilience as at the center point of development finance discourse. The next, Lee. And this is not only UNCDF. I mean, our motivation comes also from the fact that at least this 5 of the SDGs, Sustainable Development Goals, directly talk about migrant financial resilience or migrant social protection. There are other SDGs which indirectly are impacted positively by migrant financial resilience, but obviously there are several. These 5 are something that we necessarily need to address. However, despite several international conventions and recommendations, and these SDGs being at the forefront of the discourse in recent years, we have seen that from the low development or low income countries, less than 3 in every 100 migrants have any kind of insurance, pension, or social security access. And that is not a comfortable position from which we can operate. And that's one of the motivations, again, for working in this area. So the way we see it is that why is the access and usage of financial services, especially insurance and pension, limited for the migrants? The story doesn't start only at the design and development of insurance and pension products, but it starts before, where the migrants are actually receiving their salaries and wages in cash. Because if they're receiving their salaries and wages in cash, then there is little use case for them to convert that into a digital form of money and then access these products. So first bottleneck is that they're receiving their wages in cash, which we need to plug. and then their access to insurance and pension products in the country of origin or destination because of either lack of products or lack of distribution or both. So when we talk about migrant financial resilience, we are talking about these three products or services or areas: digital wages for migrants, insurance for migrants, and pension for migrants. The next one. Before we jump into the specific case of what this RFA intends to do, we have done in the last year or a little more than that, we have done research across the sector, and many of you have been consulted also as part of that, where we realized that the challenges of delivering digital wage insurance and pension for migrants lies in two levels. One is the government level, where portability and exportability of such products, especially pension products, are limited. There is no mandatory nature. The migration process, the migrant employment is not integral to digitization of wage on insurance and pension, which otherwise for the white collar employees come naturally. And the regulation for cross-border operation of financial services, especially when we're talking about non-remittance products like insurance, pension, etc., that is unclear or unavailable in many of the host and home countries, origin and destination countries. Looking at the private sector then, and we would be through our enabling policy and regulation work and other works, we would be working with the public sector towards plugging these gaps, towards creating dialogues, public-private, and also capacity building of the regulators and policymakers to plug those gaps. But looking at the private sector again, which remains a key focus and priority for UNCDF, we have seen that there is a lack of clarity on business model for the insurers, the pension fund managers, and the digital financial service providers on wage insurance and pension for migrants. And there is a lack of clarity on how the distribution, long-tail distribution, should be and can be made on this particular business cases. So that remains one of the focus areas. How the distribution of B2B value proposition for B2B distribution channels can be developed is not yet fully clustered and aggregated. The cross-border payment platforms are not yet available, or the process is not streamlined yet. And finally, most of the people here would probably acknowledge that there is latent awareness and demand for digital finance, insurance, and pension for migrants and their families, which necessitates that we work on the insurance literacy, pension literacy, overall financial literacy for women and men migrants and their family members. So this RFA basically tries to address these challenges. Through this RFA, we would like to work with private sector players to address those challenges and plug some, if not all, the gaps. However, we are very aware that the private sector would look at what is the overall market opportunity or potential from their scalability point of view in entering this field. And to do so, we have done a market sizing exercise last year to see what is the global market for digital wages and insurance and pensions for the migrants. So I would end at, the next slide. I'd end my part of the presentation before going into the RFA with this broad figures, which says that the migrant wages is a 5.5 trillion market. Just to contextualize, this is a combined GDP of 170 countries. That is the biggest market. That is as big the market of the migrant wages. Migrant pension potential is 3 to 5 trillion of assets created in 20 years, which is in today's term about 10 to 25% of the overall pension market globally. And some of the countries where there is a potential either inward or outward migration happening, the pension asset or the insurance potential in terms of premium income or the vulnerability that is being covered is substantially high to take that market ahead. For example, in UAE, our market sizing says that the migrant insurance itself has potential of $1.2 billion of premium every year, which is more than 25% of the overall insurance market in UAE itself. Similar can be said for the focus countries that we have in this RFA, which are UAE and Malaysia from the destination point of view, and Bangladesh, Indonesia, Nepal, and Sri Lanka from the origin point of view. Now, with that context, we are engaging on the Migrant Financial Resilience project, and we are trying to onboard up to 10 private sector partners through the RFA, request for application, 3 of which would be supported by with some financial assistance and technical assistance, and 7 of which would be supported by technical assistance, curated technical assistance. Ali would be detailing about that RFA process and what we intend to achieve, and also help you run through this whole process. So Ali, over to you. And
Thank you
we'll be
very much.
encouraging questions. If you have any questions at any point, just put them in the chat, or at the end of it, we will anyway have some time to discuss about that.
Thank you very much, Premises, and a very warm welcome to all of those in the audience today. My name is Ali Akram, and I'm leading the implementation of our thematic work around migrant financial resilience. Let me start by introducing the RFA and talk about the objective. What exactly are we trying to achieve over here? Premises shared some of the background and the challenges that migrants face, and this RFA comes in to help cultivate a commercially viable and scalable migrant financial resilience ecosystem that would help the financial resilience of men and women. There's a lot of background that is available, and I would really encourage all of those potential applicants to look at the annexures that does share not only a context on the migrants and this work, but also how UNCDF works when it comes to data, our gender strategy, our strategies around leveraging different tools that we have, and how those could be brought into use while applying for this RFA. Also, I'd like to clarify and share that UNCDF's RFA process is a transparent process through which we will be selecting participants and applicants that would receive our support. With that background, I'll jump into talking about the scope of the RFA itself. So the RFA would look to support participants in 3 basic areas: wage digitization, migrant insurance, and migrant pensions, and of course a combination of these 3. This being our initial intervention, we are looking to help scale innovative solutions that would create a demonstration effect and that would nudge the ecosystem by working with the private sector. And this would then also inform us on what sort of interventions work, and our future programming would also be informed by this initial RFA and the work that we do through our partners. Talking about the focus, it is focused on low-income men and women migrants and their families across 6 countries of focus, which include, on the origin side, Bangladesh, Indonesia, Nepal, and Sri Lanka, and on the destination side, UAE and Malaysia. And of course, the applications can also have a combination of these countries. So it's a pretty broad opportunity for anyone wanting to come in and seek our support across these 6 countries. So it's not point to point or corridor to corridor. It's a pretty wide net that would benefit any intervention or any proposal. So these are some indicative examples of what the possible solutions could look like. On the digitization end, Premises spoke about how wage digitization is a gateway product which opens up opportunities for additional products to be created. Product and service adaptations is also something that UNCDF's RFA could support the applicants with, and we bring in our technical expertise beyond the financial support to help with creating those gender-smart products that better resonate with the migrants and their needs. Expansion of distribution channels, both physical and digital, again, is an area where applications would be welcome, and also those looking to increase the financial capability of the migrants through financial literacy, digital literacy, anything that would drive their uptake of financial resilience products and services. And how does UNCDF work? So this is to show broadly the three buckets through which we provide our technical support. We work very closely in three areas. The first one being the ecosystem level, where we work and help our partners work with the industry, regulators, policymakers, helping create a playing field where new innovations can find ground. At the institutional level, we help partners with their innovation strategy, helping them look at their data better so they can better understand how to design products and how to find a business case, particularly looking at gender as a segment that is usually overlooked. So there's a lot of capabilities that we can help and support our partners with in that area also, and then building the internal capacity. So once UNCDF's engagement ends, there is capacity within the institution. On the product level, our technical support starts right from the design phase to the rollout and the scale up. And through this, we help our partners with different tools, which includes human-centered design principles, looking at the user interface and user experience, how to improve upon that so there's no uptake in usage that does continue, looking at marketing campaigns and also the delivery of services. So this would also look at the last mile delivery channels and how to strengthen those. Having given this context on our technical offerings, I'll go to the next slide, which presents an overview of what the RFA presents. So we, as I mentioned earlier, this is a short window of opportunity for delivery, 6 to 12 months, within which we would want to see innovations that have already achieved a proof of concept and are ready to scale. And where we can come in with the expertise and the financial support to help our partners scale up on them. So looking at the window, it's important for us to look at applications that do have that presence in the market. Applicants, and there's a broad range of applicants that can apply: banks, microfinance institutions, money transfer operators, and the list goes on. So anyone in the remittance and the financial resilience value chain can take benefit from this RFA, and they can apply independently or in a consortium. However, again, because of the timelines, the partnership has to be pre-established while applying, and the licenses and the registrations and approvals need to be in place. So we know that within the 6 to 12 window, we will be able to see impact and the potential and learnings coming out. And the scope of our assistance, and Premises touched upon this earlier, the grant amount which would be available for up to three applicants, would range between 50,000 to 150,000, depending upon the impact potential of the applications. Additionally, 7 applicants can benefit from the technical support, technical assistance that I briefly explained earlier, that would help them create and also scale their services and products. Depending on the maturity and the success of these solutions, our support can continue, and we can help these partners with further mobilization of investment capital, loans, and guarantees. And while we look at the selection of partners, the grant and technical assistance would be provided to those participants or those applicants who positively comply with the additionality assessment and on the evaluation criteria. And I'll talk about these in the coming slides, but quickly mentioning on the grant amount, we would like to see 50% of funding to be matched by the applicants themselves, which could be covering internal technical resources, staffs, and operational expenses that they might incur in the course of the project. Jumping onto the additionality. So the support that UNCDF provides it's basically donor funded or public money. So we need to be able to see how the support that's being provided creates additional value for the partners. And that additional value or additionality falls under 3 buckets. financial additionality, value additionality, and developmental additionality. So the applicants are strongly encouraged to show in their proposals how UNCDF support would unlock finance and investment that otherwise would not be available to them in the local markets or through the private sector or even the international markets in similar terms and quantities. When it comes to value additionality, the applicants should be able to exhibit how UNCDF support would unlock non-financial value that otherwise would not have been available to them. For example, the expertise that we provide, or environmental standards, or good governance and other technical support, non-financial coming their way, which they would not be able to leverage otherwise. And development additionality is to highlight in their proposals the greater development impacts that the public or private sector would not otherwise achieve. So it would be important for the applicants and applications to touch upon these areas to have a proposal that resonates. And I'd encourage everyone to focus on the section 5 of the RFA, which provides more details into these 3 areas. And looking at the evaluation criteria, so this is a summary of what you would also find in the RFA, section 7.3, on how the evaluations would be scored and judged through an independent panel. And there are different weightages that have been provided to different criteria. The developmental stage, this would look at exactly where is the solution right now in its life cycle. If it's still in the design phase, then the score would be low, and you would be able to see that range that's already indicated in the RFA. But if something's already available in the market, that would automatically be scored higher. Relevance would talk about how well does the proposed solution address the challenges that we see for blue-collared migrants, and particularly women. There's a great focus on gender and addressing purposefully the challenges that women migrants face. Scalability and the long-term potential of what's being proposed, that is also weighted highly with a maximum score of 20. Institutional experience, we'll talk about, it covers quite a few things, but the team composition, number of people that would be committed to this project, do we see senior management committing their personal time to the project being proposed or not? Is there a dedicated project manager or not? Are there additional teams involved? It could be the data team. Is there a gender champion identified within the proposal or not? So accordingly, scoring would be provided. Risk profile would look at what sort of risks could potentially the project face. It could be regulatory, it could be legal or otherwise. So again, it's got a weight of 20, and the financial feasibility would have us looking at the business case of the solution or the model that is being proposed. So everyone's encouraged to present a business case, a multi-year business case that would support the financial feasibility and just give us a sense of what the long-term potentials look like for this for the proposed solution. And RFA 7.3 talks about the evaluation criteria in greater detail. And when we look at the solutions being proposed themselves, they're indicators, and these are the main indicators that we've pulled out that we would like to see applicants committing to through their proposals, and giving us a sense of what potential impact can be achieved by UNCDF support. And these are broken up into the 3 areas of focus for this RFA to provide an indication. And there are additional ones that applicants can feel free to commit to and propose in their application itself. But here you can see it's primarily focusing on the number of registered customers, number of active customers, number of customers trained, the value, the volume, so on and so forth. So I won't go through this entire list, but it's also available in the RFA in detail. On the use of the funding from UNCDF, firstly, again, it's public money, so it needs to be leveraged effectively, equitably, sustainably for scaling migrant-focused products and services with clear, measurable, and time-bound targets, and comply to the principles of sound financial management. And you can see more of these in the RFA's section 7.4. These are just some that I've pulled out that I thought would be important for everyone to reflect upon. So they're more pleased to go back to the RFA's section 7.4. The costs that are eligible to be covered through the grant include consultancy costs, studies or technical assistance, additional that an applicant might want to use the grant for, conducting workshops and trainings for employees and for the beneficiaries, also investments into research innovation that is directly attributable to the project itself. Marketing and communication costs are eligible, but they should not be more than 10% of the grant amount. Personnel and staff costs can also be covered, however, not more than 25% of the total grant amount. Ineligible costs, the one I think needs to be highlighted more so than the rest, is the provision of losses or debts for the pension and insurance products, including subsidies of premium, claim, co-contributions, or direct transactional incentives to the distribution partners or end users are not eligible, along with others that you see on this list and you will find in the RFA itself. Talking about the structure of the RFA, and I'd encourage everyone, if you can see the link down, you would also have found this in the email that was sent out with the invite today. Do open it up so you can look at exactly how the structure and the RFA link correspond. There are two parts of the application that need to be completed. The first is the proposal screening question, and then you will find the application form, the budget, and the work plan. So these are two separate parts that need to be completed. And in the application itself, there are additional documents that the applicants would need to provide. So it'll be good for everyone to know what those are, and simultaneously as you work on the applications, maybe also arrange for these additional required submission documents, which includes audited financial statements, certificates of incorporation and licenses, technical proposal duty completed, the budget work plan, CVs of the project team. In the annexures, you will also find templates for these documents that would allow you to work offline before your submission. In your submission, you would need to directly paste these onto the apply platform, to which the link is provided below. There we go. Looking at the important dates. So the application window opened on the 17th of August. We're on at the 25th of August having this information session today. The deadline for questions, and we welcome questions to come in today also, but they can also follow in later through email. The deadline for that would be the 29th of August, and we will be posting the answers by the 6th of September on the website, and the deadline for submission is the 13th of September. So these are important dates. You will also find these mentioned in the RFA, but I just wanted for these to be highlighted today. Important next steps, that there would be a lot going on at the back end that we would be looking into, but those that are most relevant to the applicants are, they would be due diligence. Once the applications have been received, while conducting our due diligence, we may reach out to some of you if we require any additional information. The due diligence would be conducted on applications that receive a minimum of 70 marks out of 100. And I showed that table earlier, adding up to 100. There would be a stage where we, the pre-agreement negotiation stage, where we will work with the shortlisted applicants to finalize the project scope, grant amount, disbursement schedule, the budget indicators, and then notification and confirmation to applicants would go out after internal approvals have been received by UNCDF's investment board and committee. So these are three important steps through which you will find us engaging with you in the course of the selection and the pre-kickoff.